day, get out of cash and get into assets, because we don't know what's going to happen to the dollar.
Well, cash is always a bad investment.
Yes.
I mean, when people said cash is king a year ago, I mean, that's crazy. I mean, cash wasn't producing anything, and it was sure to go down in value over time. On the other hand, you always want to be sure you have enough. I mean, it's like oxygen. You want to be sure it's around, but you don't need to have excessive amounts of it around. And cash, we will always have enough cash around. But anytime we have surplus cash around, I'm unhappy. I mean, I would much rather have good businesses than cash. And we found a chance in the last year, thereabouts, to deploy. We came in with something over $40 billion in cash, and we've got about $20 billion now, and we've had some earnings. So we put a lot of cash to work, and I like that. No, I'd much rather own a good business than have cash.
And it is a hedge against the dollar?
Well, you can say all assets are a hedge against the dollar. I mean, but all you know is that the dollar is going to be worth less 10, 20, 30 years from now. I say worth less, not worthless.
Right.
You want to watch that. But it will be, and that's true of almost every currency that I can think of. The question is how much it depreciates in value. But cash is not a place to that.
Now, why is that?
Well,
that the dollar is going to be worth less.
Because we'll print more of them in relation to the amount of goods that are moving. If we dropped $1 million of cash into every household in the United States today, everybody would feel very good, except the people that invested in things that were denominated in dollars. And,
Exactly.
There will be no tendency toward deflation in this country over time, or in virtually any country.
Tendency toward inflation.
Absolutely.
Okay. His own company reflects the progress made in recent months. Last week, Berkshire Hathaway struck a $26 billion deal to buy all of Burlington Northern Santa Fe Railroad, the largest acquisition in company history. He called the deal an all-in wager on the American economy. He's in New York for a town hall event that he held with Bill Gates at Columbia University yesterday. He graciously agreed to stay over in New York an extra night, and I am pleased to have a good friend of this program and a good friend of mine back at this table. Welcome.
Thank you, Charlie. I'm pleased to be here.
It's great to see you. It has been, certainly from the middle of 2008 to the middle of 2009, one incredible year.
One incredible year. And one to a lifetime, I hope.
Yes. Tell me about it for you.
Well, it really was an extraordinary time in this country. We came closer to a financial meltdown than certainly any time I've ever seen, and probably in certain respects there was even more panic than the Great Depression, because it came on so fast and so unexpected, and the whole country wanted to deleverage, corporations, individuals, and fortunately we had a government that responded. And it was when we talked last that it was a little question of whether Congress would respond like they should. They finally did, and I felt they would in the end. I mean, in the end, they come together for things that are this vital to the country. But we had the right people in Washington. If we'd had a group that had behaved like a deer in the headlights, that deer would have gotten run over.
Yeah. So Paulson and Bernanke and Geithner were the right people at the right time. And you don't know what might have happened if others had been in those positions of power.
No, I can think of others. I'm not going to name them, but I can think of others where the ending would have been with us in the abyss rather than just peering down into it.
You made some investments during that period,
right?
General Electric, Goldman Sachs. But you just pulled out the big elephant gun.
We may have used most of our powder in that one, too.
You said I stretched to the last nickel for this one.
Yeah.
Why did you do it?
Well, I felt it was an opportunity to buy a business that is going to be around for 100 or 200 years. That's interwoven with the American economy in a way that if the American economy prospers, the business will prosper. It is the most efficient way of moving goods in the country. It's the most environmentally friendly way of moving goods, and both those things are going to be very important. But the biggest thing is the United States is going to do well. I mean, we can't move the railroad to China or India. At least I haven't figured out how to do that. So it's a little like the Rivers of that song about New York. We have to make it here, or we can't make it anywhere.
Frank Sinatra.
But it does move 400 it moves a ton of goods 470 miles on 1 gallon of diesel. It replaces a train replaces 280 trucks on the road, and it emits far less into the atmosphere that's damaging than trucking. And it moves 40%. When I'm talking about the whole rail industry, it moves 40% of the goods plus.
And you have new port of entries like Houston that will bring in a lot of goods through the Panama Canal.
And we're going to have more people in this country, and they're going to be using more goods over time. And sure, there's a bad year from time to time. And in the next 100 years, there'll probably be 15 bad years, and I don't know what order they'll appear. But I also know the railroads will be essential to the country.
Now, when you called Charlie Munger and said, I'm thinking about this, did he say, right on, Warren, or did he say, how about this?
Well, if Charlie said right on, Warren, I figured I had the wrong number. No, I mean, that would be the wrong number.
It's not the likely
that
response.
Might be my wife or but Charlie gave it kind of a low-level grumble, and that is real endorsement from Charlie.
But I mean, he also pointed out, it is said that there was this was a regulated industry.
Sure.
This was an industry that was capital intensive.
Very capital intensive.
This was an industry.
You spend money.
That was unionized.
It was unionized. You spend money in this business regularly, every day. You're spending a lot of money, repair track, or add rolling stock, whatever it may be. So it's capital intensive, and it is regulated, and it will continue to be regulated. It will continue to be capital intensive. I think that what the service provided by railroads is so important in many ways. I mean, it's the right way to move goods around the country to the extent that you can do it, and it's far more attractive in terms of global warming than using trucks, for example. So it will be here, and if we get a reasonable return on the added capital investment, because it'll take added capital investment, we'll do okay. And
reasonable return's good enough?
Reasonable return's good enough, Charlie. I mean, 50 years ago I was looking for spectacular returns, but I can't get them. I mean, we have $8 or $10 billion to invest every year, and we're in the utility business, and it's the same thing there. I mean, when we build electric generation or something of the sort, we shouldn't expect a spectacular return. We're building things that are essential to society, and people need our services. They really don't have any choice in the case of the electric utilities, for example, and sometimes in case of rail. And we should get a decent return on that. I mean, it's enough to encourage us to keep putting money into the business, but we're not entitled to spectacular returns.
You carry coal.
Well, that's a big one in terms of tonnage. Yeah, very big.
And if in fact we wean ourselves off coal, is that a big problem?
Well, we will wean ourselves off coal over time, but we can't change the 40% of electric generation that comes from coal. We can't change that next week or next month or next year, but we will reduce it over time, and we should reduce it over time.
And you can add other things to carry, and changes will be.
There will be more grain to move, and there'll be more all kind of chemicals or whatever it may be. There will be more things moving around this country 10 or 20 or 30 years from now.
Knowing your idea about moats, is it a pleasing idea that no one is likely to get into the railroad business?
Well, if they wanted to reproduce the Burlington Northern Santa Fe, it might take $100 billion or so, and
100 billion years.
They'd have to be a real sport.
Yeah. And they also are modernized today, are they not? I mean,
enormously, enormously. The railroads, take a railroad like BNSF, they're moving far more ton miles of product with less in the way of people, less in the way of fuel. Railroads have become far more efficient over the years. There were 1.5 million people employed in the rail industry after World War II. Now there are about less than 200,000 in the United States, and they're moving far more goods. So it's really become efficient. You watch those 130-unit trains double stacked.
You had other railroad companies in your portfolio.
Right.
You're selling them?
I've already sold them. Yeah, I've done that just to facilitate the transaction. I think they're good investments, but I would have held them if this hadn't happened. We sold it from 160 to 200 or something like that.
A nice tidy profit.
Yeah, we made about $3.5 billion on a $500 million investment, as it turned out. I still sold it way too soon. Since I sold it, they must have shot a gun off and said, Warren sold, now it's time to let it go up.
Well, yeah, you left money on the table.
A lot of money.
Dummy.
That's
what
exactly right.
Charlie Munger would say, right?
Charlie would say, you've done it again.
But you can't keep always trying. For the average person who's maybe never bought a stock before, what's your advice about that? You can't constantly sit there and wait and say, oh, it's going to go higher, it's going to go higher.
We don't even think about that. What we think about is how much is it selling for, how much do we think it's worth. When we bought it at $35 billion effectively, I felt the company was probably worth at least $100 billion.
How did it come to your attention? How do you find a stock like PetroChina?
I sit there in my office and I read an annual report, which fortunately was in English, and it described a very good company. And told about the oil reserves, told about the refining, told about the chemicals, everything else. And I sat there and read it, and I thought to myself, this company is worth about $100 billion. Now, I didn't look at the price first. I look at the business first and try and figure out what it's worth, because if I look at the price first, I'll get influenced by that. So I look at the company first. I try to value it, and then I look at the price, and if the price is way less than what I've just valued it at, I'm going to buy it.
And how do you value it?
Well, that's the trick. Yeah. But it's essentially what I would pay for the whole business if I could buy it. And when we sold the stock, it was valued, we'll say, at probably 250 to 275 billion. And we thought that was a fair price. Now, oil had gone up from $30 a barrel to $75 a barrel. Now it's up even further. But today, yesterday anyway, I believe PetroChina is the second most highly valued company in the world. Higher than GE, next to Exxon.
ExxonMobil.
Next to Exxon.
Have you sold the entire stake?
Yeah, I have. Mm-hmm. I wish I hadn't, but I have.
As of when?
Well, we sold it over a period of time.
Sold it over a period of time.
If it went down a lot, we'd buy it back.
Would you ever buy or sell a stock based on political pressure or
no.
sort of? So
no, the answer is no.
People being upset about Darfur had nothing to do with why you sold this stock.
The Chinese government owns 88% of PetroChina. They also own control of 29 out of the 30 largest companies in China. The Chinese government is the one that has a position in relation to the Sudan. And they have it, if you own any one of the 30 largest companies in publicly traded companies in China, you will have the Chinese government as your majority partner. And the question is, are you responsible for their actions?
You're going to China next week for a ribbon-cutting ceremony for ISCAR.
Sort of the limit of my abilities, Liz. I mean, that's what they use this.
You're pretty good at cutting a ribbon.
I've gotten used to it, yeah.
Are you looking at other companies in China?
I don't look based, no, the answer is pretty much no, but I don't look based on countries or that sort of thing. I just read every report I can, and I try and figure out whether something is cheap.
But how would you find a report like PetroChina 4 years ago? This was not a name that maybe that a lot of people would.
Other guys read Playboy. Yeah, I read annual reports.
Berkshire versus gold. You want to talk about how that's performed over the years?
Yeah, but we can go beyond that. But certainly, when we took over Berkshire, Berkshire was selling at $15 a share, and gold was selling at $20 an ounce, and gold is now $1,600, and Berkshire's $120,000. But you can take a broader example than that. If you buy an ounce of gold today and you hold it 100 years, you can go to it every day and you can coo to it and you can caress it and you can fondle it and 100 years from now you'll have 1 ounce of gold and it won't have done anything for you in between. If you buy 100 acres of farmland, it will produce for you every year. You can use that money to buy more farmland. You can do it all kinds of things. For 100 years, it'll produce things for you, and you still have 100 acres of farmland at the end of the 100 years. You could buy the Dow Jones Industrial Average for 66 at the start of 1900. Gold was then $20. At the end, it was 11,400, but you'd all gotten dividends for 100 years. So a productive asset of any kind, a decent productive asset, is going to kill a non-productive asset over time. Now, in any given 1 year period, 5 year period, any asset can outperform another asset. Tulips.
Why don't you join me, Warren? Why don't you join me and buy some cows? I like your farmland, but you're in Nebraska for Iowa. You love steak. I mean, we can have leather. We can have manure. We can have milk. We can have meat. We'll employ people.
You can have the manure. I'll take the meat.
I've got plenty of the manure. No, but we'll employ people taking care of the cows. I mean, that little bar of gold that's worth 50, whatever. We had one in here. Look, I think it was worth like $60,000 or $70,000. I can get like so many head of cattle for that and be productive. That was my point. But you like farmland. You just too lazy to take care of the cattle or something? Pay some people.
Absolutely. Absolutely. Have you ever tried to take care of cattle, Joe?
It must be. I think it might be hard. I know I've tipped a few, but I've never.
Have you tipped a cow?
No.
I hope you have not tipped. That's mean.
It's cruel.
It is cruel.
They're sweet. They're sweet, but they're not too bright. like me.
With land, you can get somebody else to do all the work, give them a percentage of the crop, and you can sit back there for 100 years and get a percentage of the crop, and you still got the land when you get all through. I will guarantee you that farmland over 100 years is going to be gold, and so are equities.